Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points to move container markets and hence your business. Today it's Monday, so we have what we call Macro Monday here at Container Exchange. We typically take a quick look at the week ahead and what sort of macroeconomic indicators are to be watched that are likely going to impact the markets, specifically, of course, container trading and leasing markets. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. So all throughout the week, I think that's very, very relevant. All throughout the week, there'll be a lot of speeches from both Fed and ECB officials. So watch closely for guidance and comments in regards to next interest rate moves. As it stands right now, last week's jobs data in the US was a blowout result, so to speak. So much better than previously anticipated. As that stands right now, the Fed will likely not continue with another 50 basis point cut in the next policy meeting, potentially, but potentially go for a 25 basis point cut, and even less likely go to a keeping rates stable sort of decision. But of course, we will continue to report on that as we get closer to that decision. Then on Monday, so this happened actually already earlier today, we have German factory orders data. Of course, a very, very important indicator here for us in Europe, sort of indicating the strength of the overall economy. That data really disappointed at minus 5.8% month over month versus a minus 2% expectation. So a big disappointment here, also continuing to put pressure onto the ECB to decrease or cut interest rates in the next policy meeting. Then relatively quiet until Thursday, and on Thursday then we have US September inflation rate data expected at 2.3% versus 2.5% in August. So inflation likely continuing to slow. And on Friday then we have the same data coming in Germany, also there now significantly below the 2% guidance that the ECB gives out. Of course, ECB has to look at the overall sort of euro area, and this is only German data, but as Germany is the largest economy in the euro area, that is, of course, a highly relevant data point. If the ECB cuts interest rates going forward, of course, this is good news for container traders, as not only sort of demand is supported for containers, but also financing cost, of course, becomes cheaper, which if I speak to a lot of our trader customers in Europe, but also in the US, is a key factor, sort of putting some pressure on traders at the moment. So high refinancing costs, essentially. And then on Sunday, closing out the week, there is a slew of Chinese macro data coming out. Most relevant inflation data, 0.4% year-on-year expected versus 0.6% in August. So continuing to slow towards a deflationary environment. And then we have still strong, but decelerating export growth at 7% versus an 8.7% in August. So of course, there's a lot of focus also on the Chinese economy right now. Chinese government is supporting specifically with sort of domestic measures, and it's good to see that exports are still going relatively strong, although decelerating. Now, that's it from us for today. Thanks a lot for tuning in. Have a fantastic rest of the week, and talk to you on Wednesday. Take care.